Friday, September 12th, 2025, Maneco 64, home of alternative economics and contrarian views. Good morning, Clive. How are you doing?
Good morning, Mario, and TGIF. Thank God it's
Yeah,
Friday. Not
yeah,
for you, for me, but for all those who are at work.
yeah. You're not at work though, are you? Oh,
I work 7 days a week, 24 hours a day
yeah,
almost.
me too. I watch things all the time. But anyway, we're gonna start today with silver, Clive, because I think silver could be ready to catapult to towards 50 and beyond. I mean, we've traded above $42 overnight. Right now, the spot price is 42.10. The high is 42.19. And the one thing I want to show the viewers, I don't know if I still have it here, but I probably don't. Let's see. Oh, yeah, I do. I'm going to share this with you, Clive. And we were talking about this on the live stream on Sunday about the bullion banks. This is what I meant, Clive, when I was saying they always underestimate uh, gold and silver because they don't like gold and silver to go up because gold and silver are the Achilles heel of this fiat currency banking system. But Bank of America, I remember a few weeks ago, I don't know when this came out, but they were predicting silver at 42.68 for 2026, and here we are just above 42. Their 2025 estimate has been blown through. Same thing for gold. The other ones I don't really follow that much. So, Clive, I think these bullion banks, maybe with the exception of Goldman Sachs, who's been quite bullish on gold, they're going to be upgrading prices a lot in the next few months. That's my feeling. What's your feeling?
I think it's inevitable. Banks have a tendency to investment managers come in late, recommending anything which has just gone up. So it's the oldest trick in the book from an investment department. Something has gone up. Now you're embarrassed because you haven't been recommending it. So you as soon as you see it's up, you start to recommend it and also try and buy it, hoping that that trend continues. So by the time you get to the end of the year, and your clients say, "By the way, I saw that da 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 had a good performance. Did you have any?" At least the investment manager say, "Oh yeah, don't worry about that." And of course, you've always got the option as an investment manager, if it doesn't perform after you've bought it, to buy something else which will go up. So I think that banks will be coming in with higher forecasts, but inevitably, when they forecast anything, they want to stay in the pack. So they will, if the gold price is, let's say, 3,500, they'll be forecasting 3,700, 3,800. But you're not going to get anyone sticking their neck out and saying 4,500. That's kind of very, very unusual and rare. They want to stay somewhere in the middle of the pack where everybody else is recommending, so they're not an outlier.
Yeah, and I think one of the reasons, Clive, why we're seeing gold and silver take off, and many people don't look at this because they still think that inflation is the CPI. They don't realize that true inflation is the growth in the money supply. I saw this recently. This is a really interesting chart. It's global broad money supply, and it reaches 140 trillion in July 2025. So it's made up of M2, M3, and it's all converted to US dollars. So there, and added to that, Clive, we've got the Fed. They're gonna cut rates next week, definitely by at least 25. But some people are talking about 50 basis points. And I saw this as well on X, Clive, by Charlie Bilello. He's chief market strategist. He's got 670,000 followers. So he's pretty popular. And I thought this was quite amazing. Stocks all-time high, home prices all-time high, Bitcoin all-time high, gold all-time high, money supply all-time high, national debt all-time high, CPI inflation, well, 4% a year since January 2020, two times the Fed's target, Fed cutting interest rates next week. I mean, it's crazy.
Well, the only thing you forgot to add in that nice list of things is um, the pound in your pocket at an all-time low.
Yeah, and so is the dollar, so is the euro, so is the Swiss franc. Of course, if you measure it against gold. And talking about the pound, Clive, we had news this morning. The statistics now come out at 7 in the UK. They used to come out at 9:30, but during COVID they changed it to 7 o'clock. I think it's because they want these numbers to come out before the bond market opens. But anyway, UK economy failed to grow in July. So they say stagnation. They haven't used the word stagflation yet, Clive, but I think it's as good as stagflation. And why do I say that? Well, because the CPI in the UK is 3.8%. It's probably more like 5. And the reason I say that is because they changed the way they calculate CPI back in the summer of 2022, and it made a difference of 1%. There's a video that I made about that. I'm going to put it up here, how they flagrantly fudged the CPI. So, and you can look as well, Clive, at the RPI, which you probably remember this, the retail price index, that's still published and that's at almost 5%. And
Yep.
yeah, I went into Chat GPT and I asked the difference between the two. And it says why RPI can feel closer to real life because it includes housing costs and council taxes, which is a huge expense for majority of people. So we are in a stagflation in the UK. And what do you do in a stagflation, Clive, if you've got a lot of savings and you want to protect it?
Well, the one thing you don't own is a bank deposit or a government bond, because for sure that's going to go backwards. And my philosophy is we can't exactly know the future, but so I like to diversify. But there's no doubt at all that if you have an ounce of gold now, in 10 years, 20 years, 30 years time, it's still going to be an ounce of gold, and it's going to buy an awful lot more. Not well, I won't say buy an awful lot more. It'll represent an awful lot more currency, whatever the currency is, than it represents today.
Yeah, and just to show you, Clive, I noticed today the price of silver in grams is trading for the first time at a pound. So,
Yahoo!
and you can see that the silver price per troy ounce is 31.14. So it's interesting because there's 31.1035 grams in an ounce. So it makes sense that we're trading at a dollar, sorry, a pound per gram. So I think that's very significant. And in my opinion, what gold and silver are telling us is that the currencies are being debased. I mean, we saw all the all-time highs, and I think the Bank of England they're going to start cutting once the Americans start cutting. They're probably going to go along, and they did cut a few months ago. So yeah, hold on to your gold and silver for dear life, I say.
Yeah, I started buying gold at the age of 18, ish, might have been 19, but very sort of as soon as I had some money in my pocket from working. And I remember going down to there was a market in London. I've forgotten the name of it now. It's closed now. I think they called it I don't know, they called it the flea market or the silver market or something like that. But you could go and you could buy these bags of pre-1947 silver coins. And I've still got some of those bags today. Well, I've never sold them. I've still got them today. So face value is about £65 worth I've got. That's the florins and so forth. But if you value it at market value, it's worth many, many times the face value.
Yeah, I mean, I guess you could call them the constitutional UK silver coins or junk. Yeah, like from 1920 to 47, they were 50% silver. Prior to 1920, they were 925, which is the sterling standard, 925. And Clive, one of the reasons why I think silver could catapult very quickly is because of this chart. And this is the silver gold ratio, not the gold silver ratio. So right now you can get 1.156%. You know, the price of silver is 1.156% of the price of gold. But you can see here this line here on top that it looks like we're breaking out of it. And I'm gonna go back on the chart, or this is a really important chart, trend line, because this was the high in 2011. So the price of silver was 3.28% of the price of gold. So we're nowhere near there. And you can see how this trend line has been like really tough to break. And it looks like we're breaking it now. And Clive, you probably remember, I remember it well, in '03 to '05, silver was lagging gold. And then silver started taking off, and gold also kept going. So I think we haven't even seen fireworks in gold, in my opinion. And I think what's going to trigger it is the fireworks in silver.
I mean, I think gold, gold is pretty much as steady as you go. You've got these regular buyers, the central banks, you've got the currency debasement buyers, you've got the safe hands buyers, looking for safety. So that's kind of regular as clockwork, and it's just ongoing, and it's all the time. Whereas with silver, you've got it's a much smaller market, and you've got some of these buyers saying, you know what, I'll have some silver as well, and that's starting to happen now. And I think that's because it's a smaller market, a thinner market, that's starting to squeeze the silver price higher at a faster pace. And and silver's got something which gold doesn't have, and that's the industrial demand. So all the time, all of the silver which is coming out of the mine production is being sucked up by industrial production and used in electronic devices and things like that, solar panels and obviously weapons. So the silver's being used, yet you've got this demand coming out of the gold market because people say, oh, it's another precious metal, I'll have some. And that's sort of, with those two combined demands, are pushing silver higher faster than the gold price. And I think that's going to continue, Mario.
Yeah, I do too. And here's a longer term chart of silver, and we've got this massive, 45-year teacup and handle. And I think what a teacup and handle usually means is when we break out of the teacup and handle, it's almost like the pressure comes off. It's like a pressure cooker. The lid comes off, and the smoke blows through into the sky. And I think it's the same thing for silver. And you can see here,
So
Clive, back in 2011, there was a high around 44. So we're almost at 50. And I think, of course, there will probably be a little bit of a test at 50. But once it breaks that, I think it's going to be a massive rush.
it's. I think at the end of the day, everybody's going to be talking about silver 2 or 3 years from now. And if you want to be ahead of the game, you've got to be into it now before everybody else is trying to get into it.
That's right. And you might have seen this earlier. Well, we have a merchandise store now for the channel. And if you're into that kind of stuff, you can see here we got a silhouette of Rudy, Sound Money Stacker. We trust in metal. And there's other merchandise there too, if you like other mugs, t-shirts, hats. And there's a link below in the description for that. Anyway, Clive, the other thing I've been noticing, of course, people are talking about all-time highs in the stock market. I just saw a headline this morning talking about all-time highs in the FTSE, but I think that's really dangerous as well. And it reminds me of Brazil, Venezuela, Zimbabwe, and such countries where their stock markets did really well. They outperformed all the stock markets around the world. But if you translated it into dollars, they actually didn't do very well. It was their currencies that were so rubbish that people wanted anything but the currency. So I've got here a FTSE to gold ratio chart, and doesn't look very bullish, does it, Clive? The FTSE in terms of gold.
Well, looking at that chart, it's a no-brainer. If you could go back to 1971, you'd have bought the gold or silver and sat on it throughout the entire period. But obviously, there's been, as
Yeah,
you can see, Barry, there's been some big fluctuations over the years. So it's a question of choosing your moment. But I think, the direction of travel is clear.
yeah.
The real money of gold appears to be outstanding the headline FTSE 100. Probably the chart would look slightly differently if we added back the dividends on the FTSE 100, but I think the trend would still be true. You'd have done better in the gold.
And the same thing for the Dow gold ratio. I spoke about this maybe a couple of weeks ago. I said that we were breaking through this rising wedge and it's continuing. So that's very interesting. Yeah, so people need to be careful. Yes, everything is going up, but I think gold and silver, they're going to go up quicker, which means the currency is going to devalue. And Clive, maybe we can talk a little bit about deflation, the debate of deflation and inflation, because I personally think if you look at these ratio charts of the Dow to gold, FTSE to gold. If you go back to, and I'll bring the FTSE back up to make the my point. If you go back to 1999, 2000, we've been basically, in terms of gold, we've been in a deflationary environment, actually. In terms of fiat, we are in an inflationary environment. So I think this debate is kind of academic, mainly because in the 1930s, Clive, gold was money, and it was a really bad deflation, but they didn't have fiat money, and now they do. So I wanted your view on that, and also we could look at AI and how you think that's going to impact prices, or you might think it might impact inflation.
Well, shall we, I mean, I'd like to start with AI, because I think that's a very big topic. And we saw yesterday, or maybe it's the day before, one of the major pharmaceutical companies called Novo Nordisk. It's a Danish company that make weight loss drugs and diabetes drugs. We saw that they were firing 10 or 11,000 people, which 10,000 people, I think it is, which is representing 11% of their workforce. Now, as far as I know, they didn't give the specific reason why they were firing the 10,000 people, but I did a video a few months ago in which I highlighted a collection of companies which I thought were early adopters of artificial intelligence. And one of the ones I focused on was Novo Nordisk. I said, look, Novo Nordisk have got they're using AI and they're boasting about it. They're saying how it's reduced the time to produce reports for the Federal Drug Administration down from 3 months to 3 days. Instead of having 50 people working on the reports, they can now have only 3 people working on the reports, that sort of thing. So there's a whole bunch of examples which Novo Nordisk had actually given themselves as to how artificial intelligence was helping them reduce the number of staff working on projects and reduce the time to get the project to finition. And then, so I didn't say anything more than that, other than I thought that companies which are early adopters of AI are beneficiaries, and we need to be looking at
Yeah, I remember
benefiting
you've
from them.
been you have been talking about that for the last few months. I remember you mentioning that to me that a lot of companies would do well because of that.
So what Nordisk have done now, they've fired a bunch of people. Now they haven't said specifically it's because of AI, but it's 10% of their 11% of their workforce. Now, putting two and two together, I'm betting they've gone around their offices and discovered that some employees are much more productive than others, and some of the employees haven't figured out that AI is going to take their jobs, and they're not doing anything about it. So they're not as productive as their colleagues. So basically, the firm has probably said, let's look at the least productive of all our employees and get rid of the bottom 10%, something like that. I mean, I'm guessing here, but I'm sure it's related to AI, and I'm sure there's a lot more to come, not only from Novo Nordisk down the line, but from every company on the planet who's got employees, because any company who says I think this is the charitable thing to say. We'll keep our employees because we've got a social conscience. We've got to be loyal to our staff, and we've got to be good for society and help people have jobs. But if any company says that, their competitors not going to say that. Their competitors going to
Yeah.
say we want to produce more profit, and the competitor will have the advantage because they'll be producing stuff faster, more efficiently, and at lower costs. So those companies which don't have this rather cruel and aggressive move will find themselves going out of business. Now, in a much better world, they'd keep their staff, train everybody up on AI, and produce twice as much goods, or 10 times as much goods, or 10 times as much things which are a benefit to society, rather than having to fire anybody. But the reality is that's not the way it's going to go. So yes, AI will be deflationary because it's going to one, make a lot of people lose their jobs. We'll have a lot of people looking for a job because of this. Now, history shows that when these sort of things have happened, when these transformations have happened, people have been very adaptive and they've been able to find other roles. And we've gone through long, long periods of history where, apart from the Great Depression, where unemployment has, broadly speaking, remained at around 5%. So someone losing his job here can eventually think of something to do there, and it's been okay. But the difference this time around is that AI is coming at us far faster than anything we've ever seen in history. It's a rapid change, and it'll take 10, maybe the internet, we can say, probably took 40 years from where we started to where we are now. But this is going to go do what the internet's done in 5 or 10 years. It's going to be really, really fast. So whether people will be able to adapt that fast, I don't know. But if you have a lot of people losing their jobs, they're not spending money unless they have a universal basic income. And if they're not spending, that is going to be deflationary in a certain sense. And then, of course, we've got the impact on prices. If companies can produce goods faster and cheaper, they're going to be torn between, do we keep our prices where they are and have much higher profits, or do we pass these benefits on to the consumer? What do you think, Mario? Do you think they'll pass the benefits on to the consumer, or do you think they'll keep it all for themselves?
No, because, you know, I heard this same argument when the internet was taking off, that it would be deflationary, prices would go down. But unfortunately, we got something called, or people called central bankers and politicians who are going to take this as an excuse to print even more. So the benefits of AI in terms of cost of living, uh, yeah, unfortunately, it's going to be yeah, stolen by the central bankers, and we're seeing it already. They're going to cut rates. They're going to keep spending because, Clive, if technology was so deflationary, how come we've had massive inflation for the last 50 years? So yes,
Massive printing is the
yeah,
printing.
yeah, they're going to
So
print quicker than the AI can benefit society. And in terms of AI, the way I see it, I see it for me, for example, I've been using it a little bit. It's a little bit like having like a servant that's really clever, that's got a PhD, and then you ask him, "Can you look at this for me, please, and tell me what you think?" And he does it really quick. That's what for me it is when I want to find out about, today, instead of looking up RPI and CPI as I usually used to and see what the difference is, I just asked ChatGPT and it did it in seconds. So yeah, and the other problem I have, Clive, is with the terms deflation and inflation, because deflation and inflation, in my book, the reason I'm so adamant about this is because I think they've been able to fool people into inflating because they've changed the definition of it. Because inflation is only a monetary phenomenon. It's like when the government, through the central bank, increased the supply of currency and credit out of thin air, and deflation is the opposite. So yes, AI will have a dampening effect on the economy. I prefer that word, but yeah, I guess deflationary.
Mary, if you and you know this, of course, but perhaps and a lot of your viewers will know what I'm going to say, but some perhaps don't. If you get a very old dictionary, maybe 150 years old, and look up the word inflation in that dictionary, it will describe it as the inflation of the money supply, the symptom of which is rising
Yeah,
prices.
that's right.
So the symptom of increasing the money supply, which was the inflation of the money supply, turned into the word which is now synonymous with
Hmm.
prices rising.
Yeah, it's like saying, "Oh, your sneeze caused your cold." It's like, no,
Yeah.
it's a symptom of your cold. Uh, there's a few other little things, headlines here, Clive. Maybe you heard about this, but Ray Dalio, the hedge fund manager, very successful. He said gold should be 10 to 15% of portfolio. So I'm gonna go ahead and disagree. I think it should be a lot more. You're probably more on his camp because you're more of a yeah, you think more in a diversified manner, but for me, the reason why it should be more, and also silver, I would include in there, is because we are in a very once in a millennium. Actually, I've spoken about that monetary like scenario that is really bad, and I think you want to have as much gold and silver as possible. Yes, I guess if you're really wealthy, you will keep a portfolio of companies. Just wanted your opinion on this, Clive.
Well, look, 10%, in my opinion, is too low. 15% is not wrong. I see no harm in going to 20 or 25% in a portfolio in the current environment. Now, if the environment changes, and I don't see it changing for many years, but in the current environment, I don't think you're wrong having a quarter of your wealth in gold or silver or related to gold and silver.
Yeah.
And funnily enough, I sent you a little extract from my bank a couple of days ago. In a particular formula, a portfolio, they think I have 6.38% exposure to gold or to precious metals. That's what they think. It's actually a lot higher because I've got other things which are exposed, which they call equities for whatever reason, but like gold shares, for gold mining shares. But anyway, they think I've got 6.38. And the message from the bank, and now this is robot generated, it's not a human being. The robot said that I have too much and I should bring it down to their recommended weighting of 1%.
And Clive, I actually have a question from one of the viewers, and he asked this a couple of weeks ago, and I forgot to ask you because he said, I'm not sure where he heard you say this, or that you said in a balanced portfolio you should also have government bonds, and he was surprised because you're not really bullish, or you don't have a good view of government bonds. So just want to ask you, do you also think people should have government bonds or bonds for that matter?
Well, as far as I'm concerned, and anybody who can understand what the risks of the market, the answer is no. It doesn't make any sense to have any government bonds at all. Now, I do have, to be honest, an exposure to government bonds, but it's like 0.01%. And I bought, there was a couple of bond funds I bought, 8 or 10 years ago. And the reason I bought them, and it was really, really, really tiny positions, I thought, I'm pretty sure this is going to be a bad investment, but just so I could keep my eye on it, I'm
Hmm.
buying these two bond funds. It was really, as I say, it's like 0. Maybe 5 years ago or so. It was like 0.01% of my
Yeah.
portfolio. I just bought this tiny, tiny holding, and of course they're both well down on the
Yeah.
purchase price.
I
So
agree
I kind of
with
proved the point.
Yeah, I agree with you. Like whenever you have a position in something, you keep an eye on it. So yeah, like you said, it's a good way to keep track of things. One thing not the one that asked about the bonds, but the guy who asked about AI, he asked me about the gold to copper ratio, and I've got it up here, a chart, uh, gold copper ratio, and here it is. And gold is basically breaking out in terms of copper. I think what this means is that yeah, gold is, I mean, copper is not really a monetary metal. And what this is telling me is that we're going to have massive currency debasement. It doesn't mean that copper is going to go down in dollar or nominal terms. I think copper could do well as well because we are in a stagflationary environment, just like in the UK. It's the same thing in the US and the rest of Europe. So, what do you think of this ratio,
So,
Clive? Gold.
so yeah, a high ratio, is what we've got, which is where the gold is up and the copper is down, or gold is up relative to copper. I think indicates that people are expecting some sort of crisis. From the gold point of view, they're expecting some sort of crisis, or they're expecting higher risk, or they have higher risk aversion. On the other hand, copper down, which is the same thing as the higher ratio, could indicate that the economy is slowing, that we're going into a recession. So what we see here is high ratio is a combination of people, on the one hand, fearing some sort of crisis. They're becoming more risk averse because they're buying gold. And on the other hand, copper is not rising as much because there could be a recession coming, slower growth, and the need for use of copper in electrification and so forth is not as high as it was previously. So I think that's kind of saying, if you are in risk assets, and gold is not a risk asset in my opinion, but if you're risky assets, watch out, because this is signaling that there could be something bad going to come to the risky assets.
Yeah, and I think gold and silver outperformed the general commodities in the 70s. I think, like you said, it's maybe pointing to a crisis. And I actually think is pointing towards more and more stagflation. And I think copper will outperform the dollar and other fiat currencies.
Yeah, a lot depends on your view, but
Yeah.
I, I have exposure to copper through some large, well-known companies like
Yeah.
Anglo-American RTZ, that
Yeah.
sort of thing. But it's not. It's just a diversification. It's no. There's no focus there.
Yeah. Clive, talking about, yeah, these companies, maybe you want to tell the viewers about you posted a video, I don't know, today or yesterday. And yeah,
So uh, I stumbled across something when I was trawling the. I was doing an investigation into a particular gold mining share. And as I investigated, I wanted to see what indices it was in. Was it in the GDX? Is it the GDXJ? And I found something rather odd. It was in both indices. I thought that's weird. And then I started to compare the two indices. Anyway, in doing this, I stumbled across something rather, which I wasn't expecting to stumble. I found that there is about to be, in the next 10 to 20 days, a major purchase of some gold mining shares. And we're talking about billions of dollars going into these gold mining shares. There's a small collection, but some of them will have investments, new investments of hundreds of millions of dollars. So I spent a long time deducing the name of the purchaser, which I've done, the names of the companies affected, and how much will go into each company approximately. And I've published all that in a YouTube video, and with together with all the evidence. So it came out yesterday. These investment changes which are going to happen won't happen for at least another 7 or 8 days, quite possibly in 20 days, and they might be staggered. But
yeah,
this is significant amounts of money moving around in the gold mining sector, and I happen to have found it. The information is not secret, but it's almost impossible to find, except now
yeah.
easy.
I'm going to put a link to the video here and also a link in the description of my video, of this video. Is it like, I mean, you have to, I'll watch it, but Just is it money flowing into is it these GDX and GDXJ putting new companies into their indices? Is that what it boils down to?
Well, Mary, I'd like people to watch the video
Yeah, yeah, yeah.
and
Yeah.
discover. So
The,
this is the reason I'm being a little bit in your video. I'm being a little bit cagey
yeah,
because the whole
yeah,
idea is that
yeah,
people would
yeah.
have a look at my video and they'll find out exactly who
So
the
you found
purchasers.
this by accident, I guess.
I found it's honestly said the information was very very well hidden. The buyer legally has to publish a certain bit of information, not saying what he's going to do, but he has to. But from that, it's possible to deduce that there will be some investments made, and from
Okay.
that, it's possible to deduce what the investment will
Yeah.
be.
Well,
So
let's leave it
that
at
that
that. I don't want
that
to.
involved a lot of hunting down, a lot of I had to get Excel and some mathematical formulas and all kinds of things. But all of that, I'm showing exactly how I got from the discovery to the conclusion on
Yeah.
my video. And it'd
But
be actually, for anyone who likes to study equities, it'd be a great thing to watch because it teaches you how you could do your research to discover all kinds of things which might be useful in your decision-making process.
yeah, Clive, you talked about McEwen mining. Are you still bullish that stock?
I'm a shareholder in
Yeah,
McEwen, yes.
because I bought some the other day. Yeah. I remember McEwen Gold back in the 2000s. John McEwen, he's good. So I bought some too the other day. I'm not telling people to go out and buy it, but I think that's a good one. And what do they do gold and silver, don't they?
Yeah, it's a gold and silver mining. It's one of those funny ones where I think they've got more gold this year, next year more silver, and then the year after be more gold because they got some projects
Yeah.
coming online.
Is
So it's
it
going to be a bit up and down.
MXN, isn't it? The ticker, I think.
I don't have the ticker,
Yeah.
but I know that ticker, but I don't know if that's the McEwen
But
Mining because I
the
haven't
other
got it. I
thing,
know it's MUX, I believe,
MUX,
MUX.
yeah. The other thing I wanted to say is that, yeah, the miners are doing well, and I have miners and it's done well. But I think it's really important also to have this, Clive, physical. And I've got some florins here. They're the UK junk. They're not really junk, but they're pre-1920. And for my viewers in the UK, and I've got some shillings as well. For my viewers in the UK, if you're interested in these coins, and this is, he's not an affiliate or anything, but is a really nice shop, and it's called Cecil Court near Charing Cross. It's called Coins Heritage, and it's down in the basement. And he's got loads of this. If you're interested, I might have to go there one of these days to get some more.
When I started work, Mario, back well, when I started work in Switzerland, so that would be in the mid 1980s, I had a paperweight on my desk, and here it is. It
Yeah.
wasn't this particular one, but it's a 1 kilogram bar. They
Mm.
didn't cost very much. I can't remember what it cost now, but it didn't cost very much. But it was the sort of thing you could safely put on your desk, and it would still be there the next day. I wouldn't put one of these on my desk today. This is now over 1,000 Swiss francs. A one
Mm.
kilogram. I don't know what that'd be in dollars. Probably about 1,000. I don't know, $1,200 or something like that.
Yeah. So I'm going to show you guys here. There it is. It's a really nice street near Charing Cross. There it is, Coin Heritage. So you go in there and you go downstairs. It's
You
got,
know, next time I'm in London, Barry, I'm definitely going to visit this because it's London, right?
yeah, yeah.
Well, which street is it on?
Cecil Court. It's like a pedestrian street. It's really
Okay.
nice. And there's other, and look, it's got other antique shops there too. There's one that ha sells only silver. So it's really, really nice.
I love these types of shops because you can poke around. You never know what you're going to find,
Yeah.
and it's not for the. What people have to understand. There's two things. You can collect silver because you want to make money out of it, that's a completely different kettle of fish. But the beauty of poking around in these shops is you never know what you're going to find. I mean, there was a time I went to a place, it's called Winchester Antiques,
Yeah.
and I just walked in and said, "Have you got any silver coins?" And the lady said, "Well, no, we don't sell that sort of." Oh, she said, "Yes, but I've got a lady who put some stuff in a cabinet here. It's not my stuff, but she's got put some stuff in my shop as one of my friends." And so she said she's got some old Roman denarius coins. Or
Hmm.
she said Roman coins. They're actually the silver coins, the silver denarius. And I had a look through, and the prices were much higher than the value of the silver. Like they had prices like £30 for a little tiny sliver of silver. But what was interesting, these were famous Roman emperors like Hadrian, for example, who built Hadrian's Wall between Scotland and England, and they were very good condition, shiny silver. And I thought, well, that's interesting, and I bought two or three of them
Yeah.
just for the curiosity, not for the silver content, but for the curiosity of having
Yeah.
something which has got a bit of history. Then I
Yeah.
went home and I realised I'd forgotten my bag in the shop. So I called them up and said, "Did I leave my bag?" And she said, "Yes, you did." I said, "I'm coming back." But in the meantime, I looked up the value of these things. You can't say what the value is but in general, they sell for more than £100, let's say, if you want to buy one, not if I'm selling it. And I thought, you know what? I just bought a bunch of stuff, and I went back and said, "Where did this lady get them?" She said, "Oh, her husband was a collector, and he died, and so she said she took this along to a coin dealer and asked him what he'd give her for them." She said she didn't like his attitude one little bit, so she didn't deal with him, but she put the same price that he would give her on the coins in my shop,
Oh, and that's a really low price because the dealer.
which is low.
Yeah. Oh,
Yes.
Clive,
So
talking about history, sorry. This is a really good book. I started reading it. Moneta, Ancient Roman 12 Coins. It's great because it talks about the history and the coins.
is Moneta that lady with the scales, and she's got two scales
Yeah,
weighing up?
Moneta is the goddess. Yeah, the Roman goddess. Yeah, and Moneta is because when the Carthaginians invaded Rome, I think 8 BC, 200 or odd BC, I don't remember exactly. Moneta was what warned, Moneta was what warned the Romans that they were coming. And from this hill, Capitoline Hill, and it became the name. They said it was Moneta or Venus who warned about them coming, only because there were geese there, and geese were sacred, and they started like making noise. So yeah, Moneta.
Uh,
And it's
and
what's used for money. Money is, and they made the coins up there in this hill. So whenever you had coins, they called it moneta, even though moneta, and monetary policy moneta. So
Mary, I have a question. I'm sure lots of your viewers would like to know. How come? Oh, what's the origin of the name of your channel, Manico64? How did that come about?
well, it's my father's name was Mario as well, and
Hmm.
he liked to give nicknames. He nicknamed my older sisters. And when I was born, I was named Mario as well. So he gave me a nickname to differentiate from him. So it's M.A. is for Mario, and Neko is for Ineko, my surname. It only has
Ah,
N and one C, even though my surname has two. So, and in Brazil as well, Maneco is a nickname for Manuel, which is a bit confusing. At home and with cousins and aunts and grandparents, they always called me Maneco. But at school and work, it's Mario. So,
great. Thanks very much.
yeah, there you go. Anyway, Clive, yeah, we've gone on maybe a little longer today, but there's a lot to talk about. And yeah, I wish you a great weekend and also the viewers.
Thanks very much. Don't forget the silver gold video miners video. Bye bye.
Bye.
Thumbs up.